Hello traders, this is a DAX recap video for Friday, February 8th. In front of us is the updated chart that was posted before the open, alongside with morning notes and with some additional charts for us for a better understanding of the market context. And that was 240-minute chart and the daily chart of DAX. Now this was the situation in pre-market around 8:20 AM, and market was basically here at the larger time frame support zone. And I said in the pre-market notes, and it's clearly visible here on the chart, that staying below this zone here equals weak market. We had this zone, line in the sand for bulls, because market can go through this zone just to test the line in the sand zone and maybe even a bit below, and then up again, and for us to have a false breakdown on the larger time frames. Because when you look at the larger time frames, we had 38.2 fib retracement of this whole up move basically at the line in the sand zone. Then we had on the daily chart very important situation here, because market, as we know, climbed higher with bearish divergences. Market did break on January 18th. This is this large green candle. We had a good breakout on the January the 18th above this resistance that then acted there as support, and also they have back tested the daily 50 and then made a higher high. Then they tested this area again, made another higher high. Now they're testing it again, yet again, today. So repeatedly testing a zone doesn't make it stronger. It makes it weaker. That's why I said that staying below first resistance zone, signal weakness. That was it. This staying below this zone is signal of a weak market, and increases chances of going below larger time frame zone around 11K. So chopping around here increases the possibility that we go even lower. Now these are the scenarios that which happens after the large moves. We will have a consolidation. That is usually a usual thing to have, and then those are other scenarios. Either we're going to have a continuation or a complete reversal as the lowest odds scenario. Now today we had a continuation move at the end. First it was looking pretty much like a consolidation, but then it turned out to be a continuation. And where you are prepared and you know the context, if they are hanging here, that means probably going below 11K. If they go below line in the sand zone, that probably means that they are going even lower. And now you can position yourself, to not catch the falling knife, because first long trade was here, available here. We are waiting here for a bounce. But if it goes below, now we are sellers. We are interested only in selling. Now let's get to opportunities. So let me just put some vertical line at the open. So the open was here, and what we had before the open? Well, before the open, market was testing the larger time frame zone, testing 11K zone, and made a range with edges are, of course, pre-market high made at 8 and pre-market low made at 8:45 AM. And when market opened, when market was open, now you observe that they already pushed down below the larger time frame zone, and you could look at this as a false breakdown attempt. Now they're again here. They didn't go to the line in sand zone, so from here they could make a move at least to this zone, to test this zone, because weak market is going to be below the zone. So, bulls have to push at least to this zone and then higher. So that was the idea behind the trade. I took that trade and showed you on Twitter that the idea was really that this could be a false break and a modest target. Why modest target? Because the entire pre-market session is here. We had a trend down move with shallow pullbacks, and now we have this. And this was the idea, around 11K to get in and to close near pre-market high and this next zone. I had my closing order here. They literally touched my closing order, but I didn't get a fill for 40 points, so I closed that manually for like 46 or 47, I don't know. And that was the first trade. Now, in hindsight, we can say now, but here, this first touch of this zone here was a good short. And you could enter later when you see this move. And now they are pushing again higher, above pre-market high again for just a few points, then failing. Then again pushing higher, and again starting to fail. So even here, at 12, 12.15, 12.20, you could enter short here. I had some other business today, so I have ceased my trading at basically at 11 and trade just at this. But for you, this here, and also be advised that don't get married to a single time frame. I use mostly 5-minute chart for showing these opportunities and talking about how this morning notes could be used as a roadmap and how to use these zones which are predetermined. So there is really no hindsight here. Zones are predetermined. Zones were there. Now look at this zone, for example. It was there for many days, and now look at how good bounce we had from it. This video is about opportunities, what you could have taken and why. Now, when you see that the market is very weak, this is all characteristic of the weak market, and it's very clearly saying to you, staying below this means weak market, so there's really nothing to buy here. Only long was from here, first test, not this. I would not have courage to buy this here, because you don't know the odds are much lower than here. This is the first test. This is the first time, and it looks like a false breakdown. And you could expect at least this. And then you should really close, because market looks weak. And now we have a confirmation. Not only it is looking weak, it is weak, because it is staying below. And they repeatedly trying to go higher, but nothing is happening. Now observe this pattern and look at the yesterday pattern. It is almost the same. Trying 1, 2, 3, cannot collapse. And you can catch that collapse. Especially if you know in advance that staying below this means that market is very weak. So this is your entry. And now you fully expect at least to get to the pre-market low. As I said on Twitter on 11 and 15, day is not over yet. They can diddle in the 100 points all day as a possibility. Bull need price above, bears need price below 10,950, and they get that. Price was below here when they made this move. At first we are still in the range, so your target is this. First target is this, or maybe because market is weak, we had a big push down, we have a range, maybe you expect, and you should really, that market can do a lower low. You cannot know that, but you could try to get a bigger bite, or just simple close here. And this is also a good trade. This is a trade for more than 50 points, between 50 and 60 points from here to here. This, nothing to sneeze about. So this, nothing to sneeze at. From 11:30, and your stop is here. You could take this trade with like 25-30 point stop and to get 50-60 points. So it is a 2-hour trade. And now when you observe this, when we are below now, we are not very interesting in longs, because this first bounce here, it was very close to the line in the send zone. As I said at the beginning of the video, on the higher time frames, this is nothing. 10 points means nothing here on 230 minutes or on daily chart, especially 10 points is really nothing. So if those bigger, larger time frame buyers didn't push it from here, why will they push it then from here, from the second try, at 1 p.m. Why? Because the market was there before the open. If they wanted to push higher, they would. And on the 1 p.m. we had price here. I would really skip this. And then when you observe this additional signal of weakness, they are out of the pre-market range and inability to go inside that range, inability to go above pre-market low. Pretty much the absolute same setup like the one we had yesterday. They can't go inside, and plenty of time. This is 5-minute chart. And look at this, how many candles are there. 1 hour, then they were here poking and poking and poking and poking. So this, and also draw yourself just rough. It doesn't have to be really precise, but this here is a bear flag, and you could also enter. This is also very clear trade. Inability to go above pre-market low, bear flag, breaking of the bear flag. We shall use bear flags, pennants and triangles when market is moving, and by going outside this range they have shown us that they could move, and this is an additional short opportunity for us. And now we are targeting next zone, because from this zone to the gap, really it's some smaller target you could close here, but from here you could really wait a bit to get a better target. And now you're using these zones. You're not particularly interested now in taking longs. Long were here where there was a chance for them to push higher. They didn't use their chance. They stayed below this zone where the weak market is below, and everything here below is weak market. So this zone is really a trader's discretionary decision. And sure, when you are hot, you're hot. If you did take these trades or two of them, and you are sitting on a big chunk of profit, then of course you could attempt a long here just with the idea of the market being oversold, exhausted to this, because from here to here you got more than 200 points. You got around 200 points from here to here. So you could attempt even a long from here. Again, now targeting either this gap, it was already filled, but there is still a line here for you as a reference, and using fib. And hey, this is a 38 fib, so I could close, I could close near that, somewhere around here, and finish the day. So another really good day for trading. It didn't look like that at the first hours when only this opportunity was available, but later when you realize, okay, they are not going above the zone, which signals that the weak market is below, and you are shorting it. And here, another short. So it was a good day today also, and over the weekend I will go, this is it for this video. Over the weekend I will make another one, a weekly video, and go in more detail on the larger time frames on both DAX and the US indices as well. This is it for this video. I wish you good trading and a nice weekend, and that's it for me.